it will be taking care of, we must take care of the protection gap to start with, which will further lead to the penetration, improvement in penetration.
GST was a significant part, particularly for term plans, and we'll have to propagate that more and more.
Can we make term insurance as the feeder product where all of us acquire customers on the backdrop of term insurance?
GST alone will not be able to solve the penetration issue. The other penetration issue that we have to resolve is, how do you get distribution more affordable?
India's insurance market is one of the fastest growing globally. And Swiss Re forecast says that India, which is currently at number 10, could be the fastest growing market in the G20 over the next 5 years. At the same time, the penetration needle has not moved. Insurance penetration is below the global averages. In fact, the life insurance penetration is 2.8% in FY25, slightly down from the previous year. Also, another fact is that the number of policies sold in FY25 was lower than FY24. So there is an issue there. So in this context, the question is whether the rationalization of the GST rates will make insurance sector more affordable and as a result will increase penetration. So what I will do is that I will request all the panelists to share their opening remarks, opening thoughts to the question we are asking, which is the theme of the panel discussion. Will the GST rationalization will lead to increasing penetration? We'll start with LIC. If you can, sir, share your thoughts on this issue.
Good morning to all of you. I would like to thank Honorable Prime Minister, Honorable Finance Minister and Government of India for this path-breaking tax reforms as far as GST is concerned. I agree this will help insurance grow, insurance will become affordable surely. But at the same time, in my initial remarks, I will say this much. GST waiver alone will not help in the increase of penetration as such. It will surely facilitate, but it itself is not sufficient to increase the penetration levels. And as far as other point is concerned, I will elaborate further when I get a chance again. It will be taking care of, we must take care of the protection gap to start with, which will further lead to the penetration, improvement in penetration. Thank you.
Protection gap, that's a word coming from LIC. Yes, Mr. Chok.
Yeah, so as Patnaik Sahab has said, it will surely help. When prices come down, it's obviously products become more affordable. So it will surely help to bring down the price, to bring down, to bring up the penetration. But one thing we should all remember, that insurance is not a product which people will stand up tomorrow and buy. So assuming that, people will suddenly start flocking to your branches and start buying more is not necessarily what's going to happen. I would say for some time in September, it did happen. For a few days, it did happen because there was, milestone date of 22nd of September. And that was good. So that's a good indicator. But we will have to keep this alive in the mind of the customer, ensure that we take it to the steps of every household, let them know the benefits of bringing the prices down and what sum assured, for example, as Patnaik Saab said, how that can take a fillip. For example, in term life today, if you have a 40-year plan, and maybe you people can buy insurance to start with, just by bringing down the GST, 7 premiums of the 40 are now becoming free. So, but ये अपने आप नहीं होगा. We'll have to go and educate people, let them know that look, it's a lot more affordable. GST was a significant part, particularly for term plans, and we'll have to propagate that more and more. So I think that's something I'd like to leave here.
Yes, Mr. Balasubramanian. No, what importantly, what Mr. Chuk is saying is that insurance is a push product and is not a pull product, and some innovations are required on the distribution front also. Yes, sir.
First, thank you for having me here. I think it's a landmark reform. In fact, the way I look at it is that the fact that it is exempt sends a very different signal in terms of the government's focus on this sector. I was born in 68, so 70s we had this movie Roti, Kapda aur Makan.
Right,
No?
right.
Then in the 2000, Bijli, Sadak, Pani.
Right.
Today I think it's Wi-Fi and Bima.
Sorry?
Wi-Fi and Bima.
Wi-Fi and
That's the way I
Bima,
would
yeah.
put it, right? Because it's a very essential aspect of life, and it's been forgotten that as though insurance is optional, it's a luxury, it's a lifestyle spend. It is not. It is a basic necessity of life. Before talking about growth, we need to preserve. Preservation is most important. So what is life insurance, term insurance? It's replacement of a person's lifestyle if the person is not there for these people around him. So I think the whole approach to insurance, I take it as an inflection point in terms of sending out a very clear message that, look here, this is one of the basic essential aspects of life, and therefore the government has made it 0% or exempt, you know.
Right.
So that I think the narrative has to be strong, saying that, look here, this is an inflection point which we all have to encash on, we all have to leverage and move forward. As regards converting from a push product to a pull product, I think having been in banking, and Anup knows this, see, in every financial services business, there has been one lead product, which is the customer acquisition engine. For
Right.
banks, it used to be current account and savings account, right? I think for the mutual fund industry, it is SIP. I think for us, the moment is term insurance. We have to solve for a lot of problems to make sure that term insurance reaches people. But can we make the term insurance product a 2-click, 3-click instant issuance product, leveraging the risks which are there? There are underlying risks which we'll speak about. It's a very highly leveraged product in terms of 400 times. For instance, we have a 2,500 rupee product which gives 10 lakh rupees cover. That's 400 times leverage. So if we can solve for some of the fraud, some of the underwriting issues, etc., I think we should all look at this moment of 18%, which is the maximum on term insurance. On every other product, it's 4.5%, renewals, it's 2.25%. In pure term, it's 18%, right? So can we use this opportunity to seize the moment and say, okay, can we make term insurance as the feeder product where all of us acquire customers on the backdrop of term insurance and then see whether we can cross-sell, upsell, the way banking has done, broking has done, and mutual fund industry has done. So that's the way I look at it. So to my mind, it's a very important reform, very important moment in the history of life insurance in this country. And I hope all of us are able to seize the moment and grow the industry.
Thank you. So what he's saying is that Wi-Fi and Bima are the new Roti Kapra or the Bijli Sarak. And also he's indicating that GST exemption is an enabling provision, but they have to work more on that. Mr. Bakshi, what are your initial thoughts?
No, first of all, thank you for having me here. So I have read these reports of under-penetration. I'll just put a different perspective to it. And that we are a country of, let's say, 140, 150 crore population. The number of policies or the unique people who have had policies from us is certainly upwards of 20 crores. And 20 crores in a family of 35 to 40 crore families are there in India. And our insurance unique policies would be 22. So I don't think it is certainly under-penetrated from a premium perspective, but certainly not under-penetrated from a distribution perspective. So first thing is that. Second thing is certainly these landmark reforms. You know, we have lived long enough in BFSI. This kind of excitement and this kind of positive discussion on life insurance, I think is happening for the first time with this kind of intensity. And intensity has come because the affordability has improved. And affordability of 18% is a massive affordability change. And if you look at ticket sizes, and if you look at PMJJBY, for example, you will have tens of crores as the policyholders within that. And maybe, you know, GST alone will not be able to solve the penetration issue. The other penetration issue that we have to resolve is, you know, how do you get distribution more affordable? How do you get product innovation which are suited for the Indian consumers, because our per capita is not that high. And so if you see when we, you know, keep comparing this penetration data, I believe that we are higher than China. And the reason why we are higher than China or lower than some other countries is not because of anything else, but it is because of per capita actually. So we should be clear as to what variables are we driving and what will happen if we want to sort of push this. What Mahesh said is absolutely right. It is a extremely high 1:400 kind of a product, and so our ability to understand risk, our ability to price risk, because even PMJJBY for 436, when you get 2 lakh cover, that too in 1 year, it's a yearly product. It is 400 times plus. Okay, and so how do we reduce, early claims? How do we reduce frauds? And so how do we bring more affordability? Because unless you do that, you cannot decongest the processes. See, in protection, I'm sure, everybody will bear it out. Customers are only looking for 4 things. आप छोटा premium, बड़ा cover, तुरंत issuance, instant settlement.
Right.
So instant settlement, I think यही चाहिए 4 चीजें, बाकी सब देखो ये सब हम बोलते रहते हैं. These are the 4 things that customers want. And which is why PMJJBY, if you see, chota premium, reasonable cover, turant issuance, and instant settlement. Now in instant settlement, I must say that the industry has really gone fantastically. Everybody is almost 99% plus. All of us, almost most of us, 99% plus in claim settlement. So that is not an issue, actually. In life insurance, it is not an issue. The other things we have to solve, but this affordability and this focus and attention to the product is very, 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 very positive. And at least, we are seeing, and I'm sure everybody is seeing. Then in channels which are not intermediated, which are online, where customers come in, all of us, I'm sure, are certainly seeing 30, 40, 50% kind of a increased traffic, which only says that there is a cost effect of this.
Right.
Different channels are behaving differently, but that I'm sure we'll discuss subsequently.
Yes, but Mr. Patnaik, I want to know how important is increase in awareness and innovation and distribution front to increase penetration, because now we have enabling condition, the GST waiver, but what next steps should be followed?
Yeah, I agree with all panelists. Awareness is very essential right now. For example, last year, entire industry per death claim, we paid out hardly less than 3 lakh rupees. We are speaking at October 2025, and per policy, the average death claim settled was less than 3 lakh rupees. And I'm coming again to this protection gap. Particularly, I have extensively worked in rural India. The awareness level for term insurance is something much more room is left for improvement. And an average agent of my organization is not very much well conversant with term insurance. Of course, the new millennial agents, those who are joining us now, they are very much aware. And I would put it this way, the same premium you have to pay, but you are getting additional 18-20% coverage getting increased. So this is how we have started telling our field force, have the awareness, and if the average death claim is less than 3 lakh rupees, something we have to sit up and smell the coffee. It's not enough. Similarly, my second point will be to have intensive training program for the agents, the distributors. I would humbly admit here, as far as my organization is concerned, there is much room left for the training, particularly in the rural hinterland of this country. And we get more than 75% business from rural India. And more than 75% agents do work in rural India. So awareness level, training, these are going to help. And this is the sweet spot now. We have got the GST exemption. And this is the right time we should carry on, and so that awareness is growing up. People are approached for term insurance, and coming to annuities also, individual annuities. They are getting 1.8% of the big lump sum premium a customer was paying earlier. For example, 10 lakh rupees. He used to pay 18,000 rupees towards GST. Now at 10 lakh 18,000 rupees, his annuity will be much more than what he was getting earlier. So that way I can see the awareness for the field force particularly, and the intermediaries, supervisory cadres between the agents and the organization is very, very essential at this point of time.
Mr. Chuk, taking from what Mr. Patnaik said, do you think that this GST waiver presents a unique opportunity to industry to pivot to protection-oriented offerings? This is an opportunity to industry to pivot towards the potential protection-related products.
So the industry has, to quite an extent, already started moving. Now it all depends how big you want the pivot to be. Now, there are some realities of life. The median age of India is 29 years. Indians are not getting married earlier, they're getting married a little later. The HLV for a family to start coming in and then starting to, kind of wanting insurance is hence not necessarily coming down or age-wise coming down. It starts catching value only a little later. Of course, my panelists will say that they are seeing people coming in at earlier ages and trying to get this product. So I'm saying there are a few moving parts which also have to be taken care of. And lots has been said by Mr. Patnaik that we have to get the educational awareness there. Innovation, if you ask me, in all fronts, whether it is distribution, whether it is product, whether it is simplifying, because insurance, all said and done, is still and will remain not an easy product to understand. Unfortunately, it's not unique for India. It's there globally.
Right.
It still requires that face-to-face interaction. Anup talked about how people have already simplified settlements. We've already made a lot of progress on even fraud settlement, etc. How to handle frauds. All of those things are there, but there is a lot more to do for people to start valuing, and hopefully what Mahesh has said, Wi-Fi and Bima. I thought he was saying wife and Bima. So Wi-Fi and Bima. Wi-Fi is quite easy. Bima is not still so easy, right? So it's going to take a little bit doing to get it there. Yes, the biggest impact is on the price. But like I said in my earlier point, that it's not that suddenly people will start getting up tomorrow and start seeing the need for it. Anup mentioned the point on where we are on the per capita side. Normally the cusp for per capita, and this you will hear from most panels, and hasn't changed much over the last 10 years. I've been in the sector 20 now. The fact that it is supposed to be around $3,000, and you keep adding a little bit of inflation to that, not too much of India is there. For those people, really, this will become more important. Savings ka component significant rahega. So that's the long message to a clear point. The 29-year-old will want something at the end of a lifetime. One big thing that people really want is living benefits versus death benefits.
Right.
So death benefits don't come to us, right? They go to somebody else. Your loved ones, of course. Hence, you will be fine, but you will try to balance more on the living. So the day people start valuing the death benefits more, that's where plain term, starts going in more and more. I like to hear the other people also what they have to say.
Basically, awareness, you are saying.
Sorry?
Awareness.
Awareness?
Yeah.
Yeah. Yeah, awareness is critical,
Yeah.
of course.
Yeah.
But it's also a fact that a 29-year-old will value a living benefit more
Yes,
than a
yes.
death benefit.
Yes. Sir, so the same thing, do you think this presents an opportunity to the life insurance to move more towards protection?
No, as I said, protection is essential. How do we really package protection, taking from what Tarun said? If you have to really provide a meaningful answer to living benefits, I think the answer is value-added services and wellness. Because if you're able to engage with the customer regularly on something he sees benefits through the year, then I think the death benefit is something which goes to the nominee. So I think the wellness platform that all of us are trying to create, in fact, we have a small platform called Happy You, which is a wellness platform from the Kotak group. So if you're able to give wellness benefits and embedded it in our products, and let me tell you what it is basically. Basically, you're offering products which tracks the customer's health and wellness, both mental health, physical health, nutrition, spiritual health, etc. If you can really keep a person healthy, that's the best thing that can happen to an insurance company. While we love settling claims and we are here to settle claims, If you can delay the claim process or prevent a claim from happening on the health side, that's the best thing that can happen. So the conversations can probably move away from pure term insurance as a death benefit to a living benefit of embedding health and wellness. And as the customer engages with you through the year in terms of your health app and various other things that you're able to do, I think the engagement level with customers will go up and the interest in this category will probably go up. Otherwise, it's a difficult concept to sell because in the era of instant gratification where everybody is finding something instantaneous to do, thanks to Blinkits and Swiggies and everything, today everything happens in 5 minutes, 10 minutes. As opposed to a life insurance policy where I say, okay, pay premium for 20 years, 10 years, and we'll give you something after that, right?
Yeah, yeah.
So obviously the engagement level goes down. I think that's where if you're able to see value-added services coming in a big way, health and wellness platforms getting embedded, even for senior citizens, if you're able to provide elder care services as part of our pension and annuity products, I think the conversations will become more enriched and we'll be able to build better engagement with our customers. And it can be slowly converted from a death benefit to a living benefit, which will probably be a little bit more useful for customers to interact with on an insurance concept.
Right. Importance of value-added products. Mr. Bakshi, do you agree?
No, I would agree that insurance is not a very high frequency product, so you don't have an opportunity to go back to the customer again and again. And any product which is low frequency, you don't create engagement with the customer. If you don't create engagement with the customer, it is very hard for customers to come back to you again and again and again because there is no reason for them to come back to you again and again. So that is the structure of the product. And so wellness or any other thing which increases higher frequency of touch will certainly help in upsell also, and certainly help in just going back to the customer to say, this is a policy that you have got and these are the benefits that you are going to get, so that they are there with the policy for a longer period of time. So 3 buckets I would put it. One is protection bucket. I think much has been discussed on the protection bucket. But within the protection bucket, I'll also say that once a per capita is low, essentially you'll see that the general financial sector and the need is towards taking a loan because you don't have surplus earlier. If you're taking a loan, the loan also must be protected. If you're running an EMI, the easiest sell is that what happens if if something happens to you, who is going to put the EMI? And whatever is the collateral will be taken care of if it is a secured loan. That is something, so it is not just retail protection that should be really sort of enhanced. I think the credit protection side is also as important and very relevant for a low per capita country like ours. Second one is an issue of annuity. I think the annuity is an important thing. No other financial sector gives annuity and guarantee for not just for life, for joint life, and then going for nomination. That is another area where one can move. And there we compete with other financial sectors which are fixed income in nature. For example, FDs, etc. Those are fixed income in nature. And I must say that government schemes which are above the normal and natural rates of government securities, those you compete with those as well. Because in India, while we say that there is no social security, actually if you really look at it, there is reasonable social security of a very large function of salaried people in government and state government and central government and PSUs and all those places. So they don't require perhaps these kind of things, which is coming through the NPS route. Then comes the pure savings, because in savings, you essentially compete with other sectors which are growth oriented. So you require growth and you also require some kind of a preservation and a guaranteed products. I think guaranteed products work very well. On the growth product, there is a pull. So if you see where does the pull essentially comes from, pull essentially comes from growth. Because growth is something everybody look forwards to because you get something more. And so this, I think what Tarun said, I think, when we look at our sector, we have to overlay what are the kind of demographics of the customers, what are the kind of pulls, and then innovation around that, and also distribution around that. Because more and more, at least we see in our place, if you look at advisors and agents, their underlying customers are slightly older customers. Because if you have to get more, because see, they have to also run their own homes. Okay, so they require a certain level of premium. And that certain level of premium can be given only by a slightly more affluent things. And so how do you do that? How do you create another distribution where you have larger volumes, lower margins? And so that innovation we still have to do. And if you put the risk parameters well, that you can do, law of large numbers in protection, like PMJJBY has shown to all of us that it does work if it is law of large numbers. Otherwise, frauds and anti-selection can hit you. Then if you have large numbers, then you can work on a distribution which is large numbers where customers are already there and they can come in. So I think there is work to do. And affordability is a good impetus, I will certainly say, both on the saving side, on the annuity side, 1.8% going away, protection, of course, 18% going away. But there are other works to do. I think we should not assume that this is the only thing and automatically if we do nothing, things will... It will become better from here, but it will not reach our goals.
Right, right. The elephant in the room, however, is the insurers losing access to input tax credit. So, Mr. Patnaik, how you are navigating these challenges?
Yeah, our priority continues to be the customer, and we have passed on the entire benefit of the latest reform to the customer. Customer first. That has been the approach even today. Secondly, as far as the commission, GST on the commission, that also the corporation has absorbed. So that's how, because I believe all said and done, even today for my organization, around 95% of the business is sourced to my agents. 1.5 million agents. So I will come to Mr. Bagchi's point. Now we need a mix of savings, protection, as well as annuity. Particularly as far as the income levels of our agents are concerned, all said and done, life insurance industry has given source of income to around 30 lakh agents in this country. And the way penetration level, GDP of India is growing, it's a growth story. And penetration levels hopefully growing even by few notches. I'm hopeful in next 5 years, the commission generated for the agents will be multifold. So that's how we believe in, let the agents as a profession, 15 lakh agents are engaged with LIC. And they depend on, many of them depend solely on the income generated from their life insurance business. So we are very much keen and aware of, we are live to their requirements. And secondly, as far as the customers are concerned, as Mr. Chugh has rightly put it, the mean is being at 28, 29 years old, but at the same time, not only protection, we have got products where a person as young as 25 can think of planning his immediate annuities. Earlier, it used to be age at 40 and all. Now, even at 25, a person can think of planning his, and because we are aware of this fast evolving social conditions like mini retirements, early retirements, staggered retirements. These are the things our product department is aware of, and we are going to develop some products which will cater to the need of each segment of the society.
Thank you. Mr. Chugh, is there a plan to cap commissions, and how you are navigating the challenges?
On ITC.
Yeah.
So ITC was a little bit of a pickle, if I can just say. That benefit was available and taken away. But I guess as Chairman IRD, when he addressed the Bima Manthan, did say that it's the first time the Exchequer actually reduced their revenues. So it's basically already, the government is sharing much of the burden as well, while so is the sector. I think the responsibility is on the sector, hence, to figure out how to manage it. The way it is there are basically 4 stakeholders we are talking about. The prime and the most important is the customer. There is a manufacturer, which is the sector. There is a distributor. And the 4th is vendors who give us service, because it's not just about commission. Significant part on rentals, the GST and outsourcing, and a lot of other things, the services that we take, manpower that is outsourced, security staff, and a lot of other things. Particularly if you have a large distribution, like we have 600 branches. So all of those branches have to be manned by people of, staffing units. So I think as a company, we are very clear. I'm quite happy to say the sector has shown and acted in unison that to the customer, we will not pass on anything negative. I think that's where it is. That's where it has been moving as of now. And it's quite encouraging. We've got this significant hallelujah moment where, the government is also born. So, हमारी भी कोई responsibility बनती है. So we are we've kind of absorbed it. But eventually, it will have to be the three other stakeholders who will have to take on. But it cannot just be the manufacturer.
Okay,
The distributor also has to handle it.
exactly.
Those distribution discussions are going on. On that, I think it's very clear that LIC has said कि हम agents को pass on नहीं करेंगे कोई impact, which is good. Because all of us first worry about the agent because that is where as Anupata said, उनका चूल्हा जलता है उससे. I mean, it's like their household is dependent on that. So, and even if we have to do something, we cannot let the rookie agents or people who are getting into life insurance get impacted. Maybe some people who are able to negotiate better with companies, those are the ones we need to particularly talk to on how they can bear some of the GST impact. So net, it is the three stakeholders, vendors, manufacturers, and distributors, who have to, between them, figure out. And I think those discussions are quite actively going on. The CEOs are talking to each other. The letters that we've issued to large banks and other distributors, brokers, and so on and so forth. Now, the follow-through of that is happening. It is a situation which has been now suddenly come in. It won't just be like a switch on, switch off button.
Right.
It'll take a little bit more of effort, and that
Right.
effort, I think we're all, in fact, the three of us and quite a few among the large companies have been interacting quite regularly to see how we can talk to each bank, each broker, and each aggregator who possibly is bearing it. And I think that's where we have to finally come to. It cannot be all going to the distributor. It can't be all borne by the manufacturer. It can't be all borne by the vendor, but it has to be a, kind of parceled out, and everybody has to stand up and raise a hand and say, look, it is part of my responsibility to bear this lack of input tax credit that is there.
Right.
So I think, long story short, that's the message.
Right. Our dear Chairman, Mr. Seth, is also with us. Thank you so much, sir, for your time. We were discussing the GST reforms on the impact on the insurance sector, whether that will increase penetration. And right now, we are discussing the elephant in the room, how they are navigating input tax credit. Thank you, sir. So, Mr. Balasubramaniam, do you agree that all the stakeholders have to absorb some hit? Do you agree with that?
Absolutely. If we have to pass on the benefits to the customer, which all of us are committed to and already done it, I think the industry needs to tighten its. In fact, less is more as far as cost is concerned. I think one is the commission, which all of us are coming together to see how we can manage. Apart from commission, we have technology expenses, rentals. So I think the productivity and efficiency of the industry has to go up. All of us have to look at all our costs and hope that less is more should be the philosophy. So we will probably take some time to reorganize. I don't think this can change overnight. It will probably be a 6-month, 12-month process where we look at each of the items and see how we can optimize. And in all this, if the true intent of the government in terms of increasing insurance awareness and penetration goes up, we'll also get some benefit of economies of scale.
Right.
So I think it's a question of how much the top line grows to make it more efficient, and how we look at our own costs, look at more automation, look at more AI, digitization, look at many more things which goes into the entire cost structure of life insurance. It's an expensive business. We are a high-cost industry, I must say. I think we need to get more and more efficient. And if you can save a lot of costs,
Yes.
that will also help us. And along the way, we expect support from our vendors, we expect support from our technology partners, etc. But if you all come together for a common good, I think we will sail through this. And insurance industry has been through many changes in the past. We just had surrender charges last year.
Right.
Before that, expense of management. Before that, 5 lakh plus. So I think the industry has been
Surrender
through
value.
a lot of changes. And I'm sure this is one more in our stride. But this time, we're all excited because the customer benefits the most.
Right.
And if all our eyes are on the customer and helping to grow the sector, I think we'll come out of this as well.
Right. Mr. Bakshi, are there any operational or structural adjustment that can be considered so that the profitability is not compromised?
No, I will on this GST issue, I think first thing we should move on. I think we should move on with this GST thing. And I'll just give you a few examples with my own experience. I think if you go back to 90s, etc., home loans which were fixed rate, they became floating rate. You come to mutual fund, which was upfront, it became trail. Service tax got absorbed. So while we are living in this phase, we sometimes forget, that these kind of things have happened in the past. And the only thing that really matters is the growth of the industry. Growth of the industry is the only thing which mitigates all of this. If there is no growth in the industry, GST, no GST, nothing can get absorbed. The first thing we have to focus that how do you give more to the customer, more to the customer, more to the customer. And more to the customer, like I said, in protection, they require only 4 things. See, we can keep talking, 4 things. Chota premium, bada cover, turant issuance, instant settlement. These are the only 4 things. So everything that we do across IIB, across operations, across cost structure, has to move this needle, number 1. Number 2, we must also understand that much of our distribution caters to the slightly more affluent part of the population. And if you again look at other industries, where the growth is coming from alternate distribution. You will see in mutual funds, the online distributors, they have grown certainly very large. Okay, you will look at banks. Your mobile and internet penetration has grown very large. When I look at our own sector, I think we have a lot of work to do in that. I would say that we should focus, take focus away from GST, and I think, whatever those operational adjustment we have to do, automatically through pulls and pressures, it will happen. But if we don't get growth out of this, whatever we'll do, nothing will happen. And first is give full benefit to the customer, make it better for the customer, create this product as a magnet for the customers to come. We sometimes take eyes away from that and we start discussing many other things. I'll say customers first, efficiency second, and because it's a risk business, let us work together to reduce the risk of the business. Take only good risk, do not take bad risk, do not take fraud risk, do not take adverse selection risk, do not take anti-selection risk. And we have seen in PMJJBY, see the number of, so it is not a loss-making product.
That is a clarification I want. I mean, you have just said, Elias said in the beginning, the entire benefit is passed on to the customer. And will the private sector also do so?
We have already done it.
Okay.
So first of all, not just benefit, I'm saying not just GST benefit. Continuously, we have to make our products better and better and better for the customer. We must not forget, we are not sitting in some island and in oasis. We compete with other savings pool. And in the other savings pool, A, we have to be competitive. B, when we are competitive, we have to communicate this to the customer so that they know that it is competitive, and we give more value, more value, more value. In fact, one of the things I would say is, we should benchmark our sector year over year. Have we given more value to the customer, less value to the customer? And lastly, just one last point, how do you get capital out of this? See, 25 years has happened in this sector. Okay, the ROEs are still very low. Where do you get capital from the sector? And I think some work is happening and very good work is happening in IDF. If you optimize the capital for the correct risk, so this is the risk, this is where you put capital. If you optimize that and you release capital, you get reinvestment. Just to quote some numbers, the total net worth in our industry, life insurance sector, is 2.5 lakh crores. In banking sector, it is 25 lakh crores. The largest banks individually has 2.5 times more capital than the full sector alone. Now, how do you gainfully deploy that capital to get growth? I think that is the question that all of us collectively should ponder upon.
I like to add one point.
Just one point.
Yeah, just what Anup is saying.
Very, very briefly.
So I think we are focusing a lot on GST and premium, etc. I think the most important thing is manage risks. See, Anu spoke about it, I spoke about it. We are a very high leverage industry. We take risk, unless like opening an account or an SIP, right? The risk there is more in what you call KYC risk. Here we are actually taking a sum assured risk with a leverage of 400 times. I think if we can create a wonderful risk management ecosystem, like I remember in 2006-07, the credit score became a very important inflection point for the entire retail lending to grow. I think if we can all come together, create an insurance score, if I can write risk better without losing money, by eliminating the frauds, etc., I think our ability to do what Anup said in terms of issuing a policy instantaneously, chota premium, bada cover, instant issuance, can happen if we can all manage risk better. I think if we can all focus on that element, that will probably give us much more leverage. Because that is a problem. While price benefits have been given, the risk is not eliminated because it becomes cheaper. The risk is still there. And we need to work on bettering our risk.
Thank you so much.